Turkey, Elon Musk, and are we giving up our First Amendment rights? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Always great to be here with you. And we've got the PGA in full swing and the markets in full sound asleep with the exception of Friday. And of course, Friday was the turkey talk. And it wasn't the Thanksgiving turkey. It was what was going on with Turkey, the tariffs that we're adding, and of course, the lira getting crushed. And of course, what we see here is maybe a little bit of contagion. But, you know, one of the things I think you have to look at, and I think one of the reasons that it is more serious, yes, Turkey is nothing but a very small part, again, probably the GDP of Indiana, very similar to Greece and the other problems that we've had in the past. However, we know that our banks are involved. We know that there's going to create some issues. And if you look at the theory from a big Jenga puzzle, remember the Jenga puzzle? You pull the piece out and everything comes tumbling down. You know, we don't know what is going to cause the next financial meltdown. We don't know what's going to cause the next financial collapse. But what we do know is that something will happen that will cause it. And of course, if Turkey starts to default because everybody wants to be paid back in their currency, that could send a ripple effect to the banks. And of course, you know, it is my opinion that the banks themselves do not have enough in reserve to begin with. Again, that's my opinion. I don't know that for fact. I know I keep hearing how good the stress tests are, but I do not believe that they have enough in reserve. From my understanding, the way that they're buying up loans, you know, they won't necessarily loan you directly, but if you go to a third-party depressed lender or a one of these lenders that, you know, overcharge, or a peer-to-peer lender, then they buy those loans from them. So again, they're accumulating a lot of loan debt, and you know, if it starts to fall, then where are they going to get the money from? Of course, well, they know they've got the Federal Reserve, which is another reason why they continue to put themselves in these ridiculous positions. And I think that's one of the rules and laws and regulations that need to change, is how much they can lend out. But as it stands, so is Turkey going to be a problem? I don't know, but it could be. Again, we are in a society right now that we are so overridden with debt, with a lack of, we've got more jobs now, but we still are not having the overall wage growth. We still have the problem with healthcare. We still have all these other issues that have never been solved. Yes, the economy is doing much better, but we have issues that are unresolved and that could cause a major meltdown. Now, again, let's remember and be clear, all right? Even though I expect a meltdown in the markets does not mean that I'm bearish forever. What it means is that we've gone up fourfold, basically, since the bottoms of 2009. And we've seemed to once again forgotten about why we got into trouble in the first place. We forgot why we got in trouble in the 90s. We've forgotten trouble why we got in the 80s. We forgot why we got in trouble in 1929 and all the other odd years that there was big problems. So is Turkey something to worry about? Not on its own. But when you combine it with all the other issues that are around, it could be. Now, again, I'm certainly not telling you to go out and sell everything. I'm certainly not telling you to go out and that chicken little, the world's coming to an end. I'm just saying that the market is searching for a reason to have a major meltdown, okay? And the major meltdown will only give those that understand and that are hedged and realize how markets work the opportunity to buy, okay? So that's really what we got here. But if you tie in the overwhelming debt between auto loans, student loans, and you know, some of these usury loans, these outside loans that are probably never going to be paid back, that brings us to a potential problem. Now, is it a problem? I am not saying that it's going to be, this is going to be it. Again, I will never pin it on one thing, but what happens is because markets never announce themselves, one day you wake up and the markets start going down and everybody says, oh, well, we got to buy the dip. And of course, the dip never comes. It continues to go lower. So we'll see. Again, I don't want to create fear. I don't want anybody to be nervous about it. I want you to understand what can happen, because I think understanding how the markets work is more important. But as we look back at last week's action, the markets were down for the first week in a while, but actually it took a big sell-off late Thursday afternoon, early Friday to actually accomplish that. So the markets were not that weak until the end. And I think when you look at it, again, if we continue in this low volume, low volatility market, you can assume that markets will continue to drift higher. That is basically what they overall do in the long run, is they continue to drift in dull market conditions until they're no longer ready to go up. But right now, again, you've got big corporate buybacks still coming in based on the cheap money. We do know that the insiders are selling, though, so that would be a red flag. But again, we're not going to say that tomorrow or the next day is the end. You have to watch the market tape and watch the action. If you watched on Friday, you saw that the bond futures rallied big, which brought interest rates way down after, once again, the 10-year tried to penetrate that 3% level. They came all the way back under 2.9. That was a pretty big move in the bond markets. And again, I think what you have to understand is that I personally believe interest rates are going significantly higher. I personally believe that the Fed is making a big mistake here. I think you see the strength of the dollar. And of course, if you remember what our black swan event is, or what we think it's going to be, is a too strong dollar with high interest rates, because that throws a monkey wrench in. The Fed has tried to suppress the dollar to keep interest rates artificially low for those that are outside the United States. So this could be another problem that could happen that will eventually bring down this market from this point in time. Again, we're not at all worried longer term, but in the short run, after a rally that we've had from 6,000 to 25,000, you would have to think there might be some selling. You've already got markets that you've got this time is different mentality being spewed all over. And now I've heard the terms, this time is different. Really? Well, it's never different. Markets never change in history, okay? You can go back to caveman era. They had crashes back then as well. Why? Because when everybody decides that they want to be on one side of the boat usually tips over. And I think that's what you've got going on here, is this is the very same issue. You've got every fund, every manager, every pundit saying that, well, the markets can never go down again. The statistics, everything is just too good right now. So how can we possibly go down? Okay? So again, I am not telling you and urging you to believe that we're going down today. What I'm saying is that it's time to exercise some caution. Now, one of the things we always talk about caution is being hedged. So that's one of the ways that you can be happy and sleep well at night if your portfolio is hedged. And I think that is something that you need to understand so that you don't have to take the brunt of one of these meltdowns. You don't have to give up 30 or 40 or 50% of your IRA. And you have to just focus on how to protect your own portfolio. And we are doing, by the way, next Saturday, the 18th, we're doing a webinar. Okay, you're welcome to come free. You can go to bubbatrading.com and sign up for it there, but it's going to be on how to hedge your portfolio. So make sure you check that out. But in the meantime, we had, gold continues to be in a lullaby. It's basically dead. It goes lower. Every rally is met by sellers. Now, we have started to see some consolidation down around the 1210 level. Now, to me, it still looks like it has room to go lower. I still believe you're probably going to see 1180 is our number. Now, we're not sellers here because, again, we missed the short opportunity to be sellers. But we have recognized that the markets do not want to rally it right now, and that every rally is met by sellers, so we're going to sit and watch and observe. It's kind of the same thing we're doing in the equity markets. We want to observe the markets right now because, again, it doesn't mean that individual stocks will go up, but overall, in a big culmination model, we think that the more likelihood that the markets themselves will be going down. Now, you take a look at oil. Oil, came crumbling down to that 66 level, which is what we thought would be the first support. We bounced off of it. I think that oil is going dramatically lower. Again, I believe we're going to see oil in the 50s this year before the year is over. And again, I think that the reasons that we were going higher, you look at the Iranian sanctions, you talk about Libya, you're looking at all reasons that were fear-driven reasons, okay? Not reasons that we should actually be concerned about. Because again, there's an overwhelming supply. we've got, as I've said before here, in this country, we've got over a 200-year supply of oil at current usage without affecting the environment, okay? We just have to get it out, which will be no problem as we continue to pump it out. So to me, there is no reason to believe that this, other than this manipulation by the Saudis, by OPEC, by all the other reasons that we see it go higher. You'll hear everybody say it's going, once a person said last week, it's going to 400, okay? Well, if it goes to 400, then we might as well just collapse the economy. But in the meantime, I think that you look at oil and it looks like it's going to go lower. Now, of course, we had the USDA report on Friday for the grains, and the grains got hammered. And of course, somebody so nicely took a cheap shot at me, sent me an email saying, see, you were wrong. I said, well, I don't know. I could be wrong, but you know, when I called the bottom in corn at 340, corn is still close to 380, 375. So again, you know, and it's only a one-day wonder. So I think we can see markets go higher. Certainly, I'm a buyer of grains and these levels. I thought that as usual, I think these numbers are a little bit overdone. I don't know what more bad news you can price into all these markets. Certainly, they could go lower. They were down at 330. Corn was down at 330. Soybeans was down at 820. And wheat was down in the mid-4s, all right? But in the meantime, wheat looks terrific and looks like it's going into the 6s. Corn and soybeans held exactly where they should have held, and they look like they want to go higher. So to me, it's an opportunity to be a buyer, okay? And again, I could be wrong, but again, I look at these, unless we're going to stop eating, all right, these trade wars are going to be settled, okay? You can bet, you can see, just watch the economies of these other countries. Look at China. China's stock market is collapsing. They're going to have to do something. They're going to need our goods. Mexico needs us. Everybody needs us. We don't necessarily need anybody else. Yes, our costs may go up internally if we can't go to these other countries, but at the end, they're going to be out of business. So they're going to have to come and set a deal. And I don't think that President Trump is asking for any deal that is unreasonable. He's asking for free and fair trade. To me, that sounds like a pretty fair deal to me. Of course, that would be better for all of us as well. It would increase the value and worth of everything that we do if we can indeed get to that point. And I would say I thought it would happen last week. As I said last week, there's going to be news. And unfortunately, it was Turkey news, not the news on China or Mexico. I do think that's coming very shortly, and it could come as soon as tomorrow. But I would not be surprised to see that news show up and trade wars be settled, and we get to free and fair trade. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line. Todd Bubba Horwitz. We'll be right back with more after the break. What's up, everyone? Remember, check out our high school investing program, highschoolinvesting.com. If you'd like to help us out, we're in our 9th year, and we're struggling to get through this year, and obviously a lot of costs, and I've funded it myself for the last 9 years. I started to get a little help last year from you at Patreon, and anybody else who'd like to step in here, go to patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Remember, this Saturday, August the 18th at noon Eastern, I'm going to be hosting a hedging webinar. It's free. You can come and check it out and see if you want to hedge your portfolio. Just go to BubbaTrading.com and fill out the little link there. You'll be invited to come along and listen to me talk about it for about an hour and explain to you how to go ahead and hedge your portfolio. And don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. And now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, some things are going on. And of course, let's finish talking about actually the actual products. And the meats look really good. I think they held their lines perfectly. I think cattle, we didn't expect it to rally last week. It stayed in consolidation. To me, it closed the week on support. Looks like an opportunity. Finally, hogs looked like they jumped off and had a spike up, limit up on Thursday. Tried to do that on Friday, but of course ran out of steam. Became very overbought. Not an issue. I think that the bottom is in the hogs as well. So I think basically in the ag complex, we're looking to be buyers. Now, I think one of the things you're looking at here, as we talked a little bit earlier about gold, but the Commitment of Traders report on gold is showing that there's possibly a big move brewing to the upside in gold. Now, again, we're going to wait for 1180. I would not be a buyer here, but there's a lot of indications based on the Commitment of Traders of how the balance of power is changing. And the people that usually control the market that are always short are now getting more neutral. So you could be ready for a big pop here. Hopefully it'll combine in with holding support at 1180, and then we'll be able to participate. But I think that there is something going on here with the gold markets. Now, Elon Musk is being sued for fraud. And I, again, I don't know the law, but in my mind, I know that what he did morally was wrong. Okay, I think it was legally wrong too, but I do not know that. But I think we'll find out. When he came out with his announcement last week and said they're taking Tesla private, they already have the financing. I don't think they have the financing, number one. Number two, I think the way they deliver the message, there are some protocol that needs to go along with that. And I don't know that he matched it, which is, I think, why you saw the stock sell off about 7, 8, 9% after the big rally. Now, really, it's just back to where it was. But I think there's a big road to hoe. I think there's a lot of problems for Elon Musk. I think there's a lot of problems for Tesla. Listen, in general, I think Tesla's, although I love the car, okay, I do not think that the company is viable in its current state. I don't see it. I think it's going much lower unless somebody comes and buys them out. And I think that, I don't know that somebody wants to pay $70 billion for a company that loses as much money as Tesla does. But from a regulation standpoint, let's see how the regulators handle this. This was very, very brutal to all the shorts, and I think that this was a direct shot at the shorts. Now, me personally, I had a short position on, but I had it covered up, so I had no risk. I wasn't worried about it. It didn't affect me adversely. In fact, it actually helped me the way it happened because I understood what to do when it was happening. But I think for those out there that were short, I think this was a direct shot of trying to manipulate the market and stick it to the shorts. So to me, that's a much bigger problem. And again, and I'm not a regulatory guy, but to me, those types of things should be illegal. And that's one of the things I hate about the social media platforms and the ability that they now have to go out and put out these announcements out of the clear blue. Okay. Now, we talked about this a little earlier, but wages, again, we're not seeing the increase in wages. Now, I'm seeing it some places. In fact, I was at Arby's last night. We went and played poker on the way back, and I saw Arby's now is offering $13 an hour to work with a 401k with a lot of good benefits. So it seems to me that they should start rising, okay, which is a great thing for the average guy, which can help them. But again, I don't want the government to interfere with wages, but I think that the supply and demand should start to make wages go higher. But the real problem here is not those wages. The real problem is we don't have enough good jobs that pay enough money, okay? We talk about how many jobs are available. Yes, there's a lot of the minimum wage service type jobs available, but the real jobs that pay real money, they may be available, but we're not qualified for that. And that's where we need to bridge the gap. That's the real pocket. The age group from 45 to 65 that are uneducated, like me, that did not, that had maybe a manufacturing job or a machine tool job or a line worker or something like that who made good money with good benefits, those are the ones that are getting squeezed out of their jobs right now. And the problem is that was where the real money was made. If you hear some of the construction workers make and some of the heavy equipment guys make, they make a lot of money. But you've squeezed a lot of that out. And so when you don't do manufacturing, we don't have enough people that are qualified to take a lot of these tech jobs. So it'll eventually wash itself out, but it is nice to see that even these smaller companies and the fast foods, that they're having to raise their wages to attract employees, not because they're mandated by the government, but because to get employees. And one of my friends who runs a big business, a big grocery business, he has to pay more to attract people to come to work for him. So I think that's a good sign that for the employees. And again, I think that's a good sign that we're seeing more jobs. So there's a lot of good coming out of this, but still we still have the overall problems with healthcare because we can't get it at a reasonable price. And we still need better wages, and we need to work on the tax program. So again, there's a lot of things out there, but there are good signs. Now again, remember that the economy and jobs have really nothing to do with the stock market. The stock market could collapse while jobs could be getting better. Again, you get to certain points, and we're kind of at that tipping point, which ties back to 3.5% 10-year with a stronger dollar, where people are going to want to more deposit their money in the bank. So we'll see how that trades out. Now, when you look at some of the derivative products out there, and why I think that we're in trouble here is you once again have the banks creating a lot of these derivative products. derivatives upon derivatives. If you saw The Big Short or whatever, derivatives upon derivatives, and they keep trying to bundle and package money to make it even more attractive, to try to create products, to create yield so that they can draw in investors. Well, once again, this is not going to be different. This is going to fail. Okay, this is again, it's the example is that you cannot continue to make something that's worth $1 worth $5 billion. It doesn't work that way, and we need to get on there. And this is again my problem with the Federal Reserve and my problem with the banking system, because they're allowed too much latitude and to do things because they're backstopped by the Fed put, we'll call it, or whatever you want to call it. There's a reason, and again, I don't think that should be the case. I believe that the banking system should be held up to the same standards of any other business. If you go broke, you should be out of business. You have to make your depositors good, but if you go bust, you go bust. Why should they be backed out and defended? Okay, and I read an interesting stat over the weekend about mortgages. Now, not here in Australia, but 59% of Australians worry about their mortgage payment, and 40% worry about becoming homeless. Now, again, we've already got problems in Canada. Okay, we've got another housing bubble there. You're hearing about it in Australia. You've got the Chinese market collapsing. You got issues in Turkey. You got issues all over the place. Do we really think that this house of cards can continue? Okay, again, we are a global economy, and I think that this is a problem. And I think that you have to look at the whole deal. And you can call this the best of times and the worst of times. If you're among the very wealthy, you are in the best of times. Okay, you've got everything working in your favor. You can borrow all the cheap money you want. And of course, if you're running a business that you know that for every dollar you can put in, you're going to make 30%, okay, and you know you can borrow that money at 3%, well, how much are you going to borrow? So again, the best of times and the worst of times, because the people that are struggling, homeless is up dramatically throughout the country, okay? So there's a lot of issues that are here that are being very problematic that we continue to ignore, okay, including a lot of the things that we don't talk about here, okay, but there are issues out there and there are problems that are being created that need to be addressed. And I think it starts with the way that we have the ability for our Fed to do things, and which is why they should be audited and why we don't really need them at this point, which is why you see the bigger demand for the cryptocurrencies. Everybody wants to talk about, well, the Fed doesn't like X. Okay, I heard somebody the other day talking about the tariffs and everything else, and go, well, the Fed doesn't agree. Well, the Fed has done nothing but destruct the dollar for 105 years. So why would I want to put my eggs in their basket? They have done nothing for me, okay, but make me work harder to make the same amount of money. So that's something to think about. In the meantime, we're going to come back with my commentary, and which is going to be, are we losing our First Amendment rights? This is Todd Bubba Horwitz. Bubba's Bottom Line. We'll be right back with my commentary after the break. What's up, everybody? Make sure you check out our high school investing program. If you'd like to check it out and help us out, go to Patreon, patreon.com/Bubba Trading. And don't forget, Saturday, August the 18th at noon Eastern, I'll be doing a webinar on hedging, how to hedge your portfolio. If you'd like to see it, it's free. Go to BubbaTrading.com. There'll be a link posted there for you, and you can sign up for it. Love to have you come aboard, so go check that out. And also, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. And now let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz. And of course, every week I get to bitch a lot, but I get to, at the end here, I get to really crank it out. And I have a question to everybody. Are we losing some of our First Amendment rights? Okay, the one I am referring to is the one of free speech. Going back in history, that is one of the main rights we have is free speech. And of course, you had in Skokie, I don't know, 20 years ago, I can't remember how long ago, but the KKK got a permit to talk. You've had many areas of where free speech, the right of free speech overrid the disdain of the people that didn't want to hear it. But of course, if I heard a quote one time, which is, in our country, it's the right to say what you have to say without provoking. without actually attacking. And again, I think that is what should be. But I think with the new guidelines and things of the social media platforms, I think we are starting to lose our First Amendment, our right to free speech. When you have Facebook and Google and Twitter and the rest deciding what you can put on those as speech, okay, and you see how this went out through the election, you can see how it went through all of the different things, that they are eliminating our ability to free speech unless you agree with their political views. Okay, so to me, right now, our biggest form of communication is through social media. It is through YouTube, like we are here. It's through Facebook. It's through Twitter. It's through some of the other services that we are out there. But now that we're seeing a lot of speech restricted based on opinion, I think that is starting to destroy what we know as some of our First Amendment rights. And I think that this is something that is a very sad and tragic issue that has to be addressed, because, again, you're allowing a lot of things to go through, but you're not allowing the freedom of all things to go through. Now, I think that threats and those things obviously should not be allowed, but I think opinion, okay, which is what your First Amendment is, allow you to express. People write their opinion. You hear the difference between, on the news, you've got most of the news is to the left, but you do have those that are to the right as well, and you have your choice. But they have the freedom to broadcast that message. You have the freedom to decide whether you agree or disagree or don't want to listen to it. But when people start censoring our abilities, I think that becomes a bigger problem. And I'm not sure what you think, but certainly if you have an opinion, I'd like to hear it as well, and you can please reply back to me. But in the meantime, this has been Bubba's Bottom Line, and as always, I thank you for being here. We'll see you tomorrow for Bubba's Daily Update, and then, of course, next week for Bubba's Bottom Line. Have a great week, everybody. Thank you so much, and we'll see you next time right here on Bubba's Bottom Line.